Welcome to HDFC Securities 5-minute market wrap-up for the week ended July 26th. A sharp rally on Friday lifted Indian equity markets with the Nifty 50 index closing 1.3% higher. Both the BSE Midcap index and BSE Smallcap index rallied this week to close more than 3% higher. The bank Nifty fell 1.7% dragged by results which were weaker than expectations. Nifty Pharma index rallied by 6%. Nifty Media, BSE Power and Nifty Auto indices closed more than 5% higher for the week. Nifty Realty Index was down 1.8% after the budget proposed removal of indexation benefit for capital gains on real estate. In top 5 weekly Nifty 50 gainers, Tata Motors shares rallied by 13% followed by HDFC Life which increased by 10.6%. Sun, Pharma, NTPC and BPCL shares were up by more than 8%. Among weekly losers, Axis Bank share fell by 8.90%. Shares of Wipro and Nestle saw a decline of 5.8 and 4.7% respectively. In select market movers, shares of Jyoti Labs rallied 11% after positive Q1 results with a volume growth of 11%. Shares of United Spirits rallied 9% after positive Q1 results. Among losers, shares of Axis Bank fell 9% amid concerns over rising credit costs and a challenging deposit environment. Shares of JK Paper fell 5% after its June quarter profit fell 55% from a year ago. FII activity was mixed during the week but ended as net sellers to the tune of Rs 4,721 crores of equities in cash this week. DII's net bought equities to the tune of Rs 8,110 crores in cash this week. The week did not see any main board IPO. Sandstar got listed this week at a premium of 10.8% to the issue price. In key macroeconomic news, US GDP grew by 2.8% in the second quarter, much faster than expected 2.1% and far ahead of the 1.4% reported in the first quarter. US PCE index rose by 2.5% year-on-year in June in line with expectations. Core inflation continued to soften and came in at 2.6%. The People's Bank of China cut one-year PLR by 20 basis points in an attempt to boost its struggling economy. This was its biggest cut since COVID-19. US equity markets continued to witness a sharp correction in the tech-heavy Nasdaq index which was down 2.1% this week. Moving to bond markets, India's 10-year bond yields declined by 3 basis points after the budget projected fiscal deficit at 4.9% of GDP. US 10-year bond yields moved lower and is now 13.5 basis points lower compared to a month ago. In this section we discuss select research reports published by our research teams. The same can be accessed on our website. Reliance Industries' consolidated operating profit was down 9% compared to the previous quarter. We retain our ad rating which is premised on recovery in oil to chemicals business and operating profit growth in the digital business. Bajaj Finance earnings were below our estimates on account of elevated provisioning and NIM compression. Current valuations offer lucrative risk-reward. We maintain a buy with a target price of Rs 8,810. Axis Bank missed estimates on account of higher credit costs. There are signs of early stress in the retail unsecured segments. We retain the ad rating but cut target price to Rs 1,260 only. L&T expects to maintain a positive year-on-year margin expansion. The company maintained 15 and 10% revenue and order inflow guidance for the year. We retain the buy rating and a target price of Rs 4,030 only. Our retail research team published a note on Tal Bros Automotive, which is an auto ancillary company manufacturing gaskets and forging products. Our team expects profit to grow at a compounded 24% per annum over the next 2 years. We have assigned a base case fair value of Rs 387 per share. That is all for this week. Do refer to the detailed disclaimer on your screens. The securities discussed in the presentation were for information and educational purposes only. Thank you.